Hey guys, it's Mrs. Invest. Happy New Year. I hope you guys had a great Christmas season. With it being the new year, I thought I would make a video about my top 6 tips to get you and your investment portfolio ready for 2022. Now, this information is available online, but it's hard to find and it's sort of scattered everywhere, so I thought I would make a concise video of the steps that I go through in the new year to pack up 2021 financially and to get 2022 started with my investment portfolio. I think all these tips are super helpful and they are all must-know pieces of information if you are handling your own investment portfolio. So let's get right into it with tip number 1. Okay, so the first thing you have to do to pack up 2021 is to log on to your online brokerage and go to the form center. There's got to be a tab, something along the lines of tax forms or form center, and print out all tax forms relating to your non-registered or taxable account for 2021. The year is over, so all the tax forms are there and you are going to give those to your accountant. Now, this is important because on these forms, it will show your capital gains for the year or losses, hopefully not, your dividends that you received, and any interest income. And since this is a taxable account, we will have to pay taxes on the interest, the dividends, and the capital gains. Pro tip here, near the end of the year, if that you are holding bags, you have stocks that have done really poorly and you think that there is no chance for these to recover, you just want to get rid of them, the end of the year is the time to sell these stocks for a loss, because hopefully if you have some capital gains, you can use those losses to offset the gains. This is something your accountant will do, and it helps you to save a little bit on tax, and it gets rid of the losers that you're holding. Now, this is a little bit different if you're holding a stock that's down, but for whatever reason, but you expect the stock to recover in the future, there's no reason to sell that. But if you're holding a complete bag, you wish you never bought it, you want to get out of it, it's a lot better to sell it at the end of the year, so in December, as opposed to waiting until January, because if you sell that loser in January, you have to wait a whole 365 days to use the loss to offset your gain. Now, when it comes to selling your losers, there is one thing you have to keep in mind, and that is the superficial loss rule. And what this means is at the year end, in December, at the end of the previous year, if you sell a stock for a loss, you cannot repurchase that stock for 30 days. So for example, if you bought it, or if you sold it December 15th, you can't repurchase it until January 15th. And the reason for this is because it's to prevent people from trying to skirt around the system, selling losers to claim all their capital losses, and then immediately rebuying the stocks the next day. So keep that in mind. You have to use the capital loss system honestly and sell losers that you actually want to sell and don't intend to rebuy. However, if you want to rebuy them, you can. You just have to wait 30 days if you want to claim that loss as a capital loss. Another small tip that I've noticed now that we're on the topic of packing up 2021, now this is totally anecdotal and it's just what I've noticed. When you're thinking of selling losers and claiming capital losses, I find that stocks that have had some kind of pump earlier in the year and then just collapsed, so the stocks that have essentially performed really poorly throughout 2021 or whatever tax year you're looking at, they tend to get dumped really, really hard at the end of December because you have a lot of people holding losses. Maybe they bought into the hype and they held hoping for, some kind of recovery so they could at least break even to cash out, but they're deep in the red and they figure at year end, you know what? I've waited long enough. I don't think this is going to recover. I just want to take whatever money I have left. I'm going to sell and claim the loss. So the tip here is if you're holding a stock that has performed weak that year, don't wait until the very last day or the last few days of December to sell it, because chances are, even though you're already in the red, it's probably going to get dumped a lot more and you're going to be way more in the red if you wait until the very last second to sell it. So this is kind of an anecdote. Like I said, it's not a hard and fast rule, but if I was holding a major loser, I would not be waiting until the very last day of the year to sell. I would probably sell it a little bit earlier. Okay, so that's all for 2021. Let's move on to 2022. And my second category here is the TFSA. So with January 1st rolling around, the new year, our TFSA contribution limit has increased by $6,000. So that means everybody who's above 18 in Canada can now add an additional $6,000 to their TFSA. Now, how much money you specifically can add to your TFSA really depends on a few factors, and you're really in one of three categories. So category number one is if your TFSA has already been maxed out, meaning you've contributed as much as you can from 2021 and prior, then all you can contribute is $6,000 in 2022 because that's the maximum. The second category is if you hadn't maxed out your TFSA from 2021 and prior. And what that means is you can still contribute the $6,000 maximum for 2022, but you can also contribute what you the excess room that you hadn't used from prior years. Now, a way to find this out the easiest way to find this out is to go on CRA, make an account, a personal account, and log in, and it will tell you right there what your available room is on your TFSA. Now, in my opinion, the best time to do this is on January 1st because it's a new year, and so, chances are you haven't done anything to screw up your TFSA yet. You haven't over-contributed or withdrawn or anything. And so you'll get the most accurate picture of what room you have available. Now, in comparison, let's say you logged into your CRA, 9 months into the year. Amount that you see that you can contribute into your TFSA is going to be exactly the same on January 1st as it is 9 months into the year, even if, let's say if you contributed $100,000 into your TFSA and you went over, your CRA login will still show the same amount of room as you had on January 1st because it doesn't get updated until you file your taxes for the previous year. So that's why I suggest for beginners not to check how much room they have, like in the middle of the year, because you could be led astray if you've made deposits and withdrawals within those accounts because that won't be reflected on your CRA login. And the third category is if you are someone who has over-contributed to your TFSA from 2021 and prior, meaning you've deposited too much money. Now, hopefully you caught this mistake in 2021 and took the money out at that time. But let's say, it's a new year, you're logging on, and you realize, oh my goodness, I've over-contributed. So what you have to do is, you are going to pay a penalty on the over-contribution amount from the last year of 1% of the excess amount. But now you don't want to contribute $6,000. You want to contribute $6,000 minus the excess amount that you over-contributed from previous years. So let's say last year you put in $7,000 instead of $6,000. This year you'd put in $6,000 minus 1 or $5,000 to compensate for the difference there. For me personally, the TFSA contribution is what I prioritize first in the year. I try and start saving up some money in 2021 so that once January 1st rolls around, boom, I can deposit it right away into my TFSA, because with investing, time is so precious, and especially when you're working in a tax-free account, every month that you get to compound makes a big difference over time. So this, in my opinion, should be a priority for every Canadian, $6,000 into your TFSA. Okay, and tip 3 for the new year is the RRSP contribution deadline. Now, the TFSA that we just talked about works in January to January, exactly 12-month blocks. Forget everything about that. The RRSP is different. So in the RRSP, you still have January and February up until March 1st to contribute to your RRSP for it to still count against your earned income from 2021. So the reason here is the government just gives Canadians 2 extra months to top up their RRSP, so that money that you've contributed can be used as a tax deduction against your income, which is kind of nice. Now, however, although you can contribute for the prior year up until March 1st, that doesn't mean you can only start contributing for 2022 on March 2nd. You can still start contributing for 2022 on January 1st. So let's assume you've maxed out your RRSP by the end of December for 2021. Then you can right away in January start contributing to your RRSP at the amount that you're allowed. So the amount that you're allowed is 18% of your income reported, of your earned income. So it's not any income, it's not dividend income or capital gains, it's of your earned working income that you reported on your tax return from the previous year. So again, contact your accountant, find out what your income was on your tax return the previous year, And if you can calculate 18% of that, and that's how much you can contribute to your RRSP this year, or just ask your accountant, be like, hey, what's my RRSP limit for 2022? And they'll tell you. Now, if you are a high income earner, there is a maximum for the RRSP regardless of how high your income goes, whether you earn $1 million a year, 10 million a year. And the limit for 2022 is $29,210. Obviously, the RRSP contribution room, especially if you're at higher income levels, it's a much larger amount of money. Like, most people don't have $29,000 just laying around, and especially after they've just put in $6,000 into their TFSA. So my tip here is slowly start adding to the RRSP, but don't forget about it throughout the year. Sometimes people are really gung-ho in January, they top up their TFSA, they put a bit in their RRSP, and the rest of the year they're like at Louis Vuitton and going on grand vacations, and they completely forget about their RRSP. So don't forget about her, she's really important. But in my opinion, I do prioritize my money in my TFSA. And then once that's done, then I start adding to my RRSP. But my RRSP definitely takes me a bit longer to add to because it is a larger contribution limit than the TFSA. And same thing here, if you're not quite sure how much you can contribute for 2022, you can contact your accountant, but you can also log on to CRA Online and it will tell you for the year based on your income last year, as long as you filed a tax return in Canada. So the CRA login is really good for knowing your TFSA and RRSP contribution limits. And my tip number 4 for the new year is start figuring out what you want to invest in for the year. Now remember, putting cash in the TFSA, putting cash into the RRSP, or even cash in your non-registered account, that's not investing in and of itself. It's no different if you just took your cash and put it in a fish bowl and left it on the counter all year. It's not going to do anything. So you actually have to buy assets within those accounts. Now, if you're not sure what to buy, this is like the most common question. I'm a beginner, this is great, I have to invest, but what do I buy? This is what my channel is all about. I have a bunch of videos on just, basics of investing, a beginner no-brainer portfolio with ETFs. So check out some of my other videos, maybe for some ideas just to get more financially literate and know what's possible within investing. Keep in mind, I'm not a financial advisor. I'm just a regular person who's interested in these topics. So none of my videos are financial advice, but I do think that they are super entertaining because it's not advice. Okay, and my 5th tip is to find a good accountant. A good accountant is worth their weight in gold, and high-priced accountants often are not the same as good accountants. I know it's hard to distinguish between that, but the price you're paying for an accountant doesn't necessarily reflect the quality of accounting you're receiving. And I would meet up with your accountant. I know it's COVID, so maybe like on Zoom now, but meet up with your accountant, have a face-to-face discussion, and talk to them about your life situation, your financial situation, and I think you'll be amazed about the tips your accountant will give you about your specific situation and what you can do to save yourself on taxes. Our biggest expense, even though food has gotten so expensive this year and housing is expensive in so many parts of the country, our biggest expense as Canadians is still taxes. So this is an area where you really want to optimize yourself. And your accountant may give you tips on, keep these receipts at the end of the year, and we can use them as tax deductions, things you may never have even thought of, or things that you and your spouse can do to optimize your finances a bit better. So I don't think that this should be something that's overlooked. You might be like, oh, boring, Mrs. Invest, find a good accountant. But this is so important. And get a good relationship with an accountant who you really trust, who you have good open communication with, and see what their advice is on what you can do to optimize your tax situation. My last tip is to figure out your savings rate for 2021 and come up with a budget of how much you want to pay into your investment accounts every single month in 2022. Now, just as we budget for our mortgage and groceries, we should, in my opinion, have a budget of how much you must include in your investment accounts every month, similar to how you must pay your rent or must pay your mortgage. It is that important of an expense, in my opinion. Now, when it comes to figuring out your savings rate on the previous year, I do have another video all about savings rate. I'll link it below, but it's basically how much you saved, how much you put into either savings or your investment accounts compared to how much your income was for the year. And I like to use after after-tax income, because that's money that you can actually spend. And it's pretty eye-opening, honestly, like what you think you save versus what you actually save. And don't be demoralized if your savings rate is like 5%. You know, at least you know that information and you can use it to set a goal for yourself for 2022. And if you have a number in mind, I think this is so helpful. If you just have a number of, this is how much I want to put directly into my investments every single month, not only is it super satisfying seeing yourself stick to that goal, but the most important aspect of investing is investing consistently and hopefully early in life. And that consistency is really what allows you to win long-term and generate long-term wealth for yourself at a young age. And even if you don't stick to that number every single month, at least you know a number that you are working towards, so you're not just flying blind every single month with no idea what you're doing. So those are my tips for 2022. I personally follow all of these tips and do everything that I've said in this video. Again, it's not advice, it's just what I do and what I think are really important things to know as Canadians. Please let me know what kind of topics or videos you want me to make. I make these videos truly for you guys, and I'm happy to do them. You can send me an email as well. Like the video, subscribe to my channel, and you can also follow me on Twitter at Mrs. Invest1. Take care. See you in the next one.